Welcome to Bankruptcy Through the Looking Glass with Barry Levine.
Welcome to Bankruptcy Through the Looking Glass with Barry Levine. I'm your host, Zofia Morales, and today's episode is Rebuilding Credit After Bankruptcy, Strategies for Long-Term Financial Health. Welcome back, Barry.
Hey, it's always glad to be here, assuming I know where I happen to be, but one of my favorite topics, rebuilding credit, because that's one of the things that almost everybody who comes into my office asks me about. And what I generally tell them is filing a bankruptcy is not the end of the world.
It feels like it probably in the moment, but I would have to agree it is not the end of the world. But what are some immediate steps they can start taking to start
Very
rebuilding?
often it depends. It depends on, lots of times people have ongoing debt that is going to survive or go along with their bankruptcy post-discharge. If you're financing a car and paying for that car in a timely fashion, of course, if you're a year in arrears, don't expect anything. But if you're paying it on time and you go through the bankruptcy and you continue to pay it on time, that's going to show that on your credit report as a good entry. The same thing when you have mortgage payments. The problem, though, is always a problem.
There's always a
Is
catch.
that when when you go through a bankruptcy and let's say you have that car and you do nothing, but you just keep making the payments on the car, if you pay off that car on your credit report, it doesn't show anything other than the debt was discharged in bankruptcy.
Oh, really?
Unless you actually reaffirm the debt, which means you're going to say the debt is going to survive your bankruptcy, it doesn't show up on your credit report. And the first time I encountered that, I had a young gentleman who, this goes back about 20 years, he had a computer company that failed. And he had a house that was so far underwater, he couldn't reaffirm the debt because there was no equity. He had no income. I'm in a service business. You want me to ask the court if you want to reaffirm it? I don't care. But he got his discharge, calls me 10 years later. He's managed to make 10 years worth of payments to his bank.
Oh.
And he wanted to refinance because the mortgage rates had come down.
Sure.
He called his bank up, and his bank told him, now this is the bank who he's been making 10 years worth of payments to, that the debt had been discharged in his bankruptcy.
So
and there was nothing they can do for him.
Collecting his mortgage payment on top of the settlement.
Because it wasn't reaffirmed. And I actually had drafted a statute here in Massachusetts that would make the companies report the payments, but the local legislature had better things to do than my little statute.
Then try and make it make sense.
but the other thing that I suggest people do is, and this is somewhere along the lines of easier said than done, is try to develop a relationship with a small bank. Maybe a credit union, not a mega bank, a bank that would look at you as something more than just a FICO score. Most people today, when I had a lot more hair, the people would file bankruptcy and they took trips and they did this and they did that and the other thing. Most people, and it's been a long time now, who are up against it for one reason or another. And, they don't very entertaining. Nobody likes to sit here and talk about filing a bankruptcy. But, the thing is that if you find a bank that can appreciate that this is somebody who didn't, profligately use their credit cards, what happened is they were, I had a woman who was making $200,000 a year. Suddenly she's making 40.
Yeah.
You can have a debt service at the higher amount, but you certainly can't maintain it at the lower amount.
Exactly right.
And so what are you supposed to do? But banks, bigger banks, they look at your credit score and well, it's this, that, and the other thing. And the other thing I recommend, which is fairly easy to obtain nowadays, I don't know, a number of banks here offer them, and you've probably heard of secured or collateralized credit cards.
Sure.
Those you put some money into a CD or a savings account, and they give you a credit card. You make the payments, everything is grand. You earn interest on your money. You don't make your payments, they take your money. It's fairly simple.
Easy
The other
peasy.
interesting thing is that creditors nowadays seem to look at post-discharge debtors as a decent credit risk because some of them do make 40, 50 thousand dollars or more, and again they can't file a bankruptcy for 8 years.
Yeah,
So
exactly.
they'll give them a small line of credit, and they offer teasers. You make a payment on time, they increase it, and they'll find that it really isn't the end of the world. The only thing they'll may discover, like they'll be able to finance houses. They won't necessarily be able to get the A rate, whatever the bank is giving their best customers, but they'll get an interest rate. And once they get in the market and have something, they go from there.
So, how does understanding credit scoring models help somebody take effective steps towards repairing their credit? uh, Humor me, man.
To me, I don't think it can make people happy. They have people say I had an 800 credit score. Well, the credit card companies don't give you a gold star for paying your credit card debt on time. And in fact, if you miss a payment, that low interest rate will go to 26% in half a second.
Yes.
So, I look at things like that, it makes people happy. I have a credit score. How much, in my opinion, it only matters maybe if you're looking to buy a house or something like that. And then it really only matters its interest rates.
Yeah.
You're not going to, if you have a 200 credit score, well, good luck. But, if it's low, it's more a function of what the interest you're going to pay is.
Yeah, exactly.
And then you can work off of that as you get started. And I very often I have people who I'll will get refinanced through a high interest lender for the sole purpose of being able to apply for a new mortgage, a standard mortgage, like in 2 years, and have this 2 years worth of good mortgage references for him.
So, could you discuss some of the differences between the secured and unsecured credit lines and how each plays a role in rebuilding after bankruptcy?
Well, unsecured credit lines, the creditor is taking you at your word that you're going to, pay them back. They have no collateral for the line of credit, and if they deign to give you $1,000 or $2,000 line of credit, they have to hope that you continue to make your minimum payments or pay it off. Collateralized credit card, they happen to be, having sitting in a better position because make the payments. I'm taking your money. It's
Yeah,
very simple.
exactly.
Uh, so that's really the major difference. The collateralized credit cards, I happen to think they serve a purpose. I mean, very often I'll have young people, I have young children who, they'll go through a bankruptcy and, the kids want to go to Disney and you need a credit card. And you're not going to, if you don't have a credit card, you're not going to take $2,000 in 20s to rent a car
Yeah.
and you have to give them a cash deposit. So a collateralized credit card is perfect for somebody like that. Now they can take their kiddies and spend thousands of dollars down in Disney World and rent a car without having to give them that big cash deposit. Forget about paying the entry fees and all that other stuff. They
Yeah,
probably have to take
exactly.
out a
Oh,
mortgage.
heavens. Yeah, Disney has become quite the expensive proposition.
Well, I remember when my folks they were in Mondo Condo in Coral Springs, they used to get a discount. Residents got a Disney World discount. They couldn't give it to their children though. But what can I say?
There you go. So, what are some common pitfalls that you see that people should try to avoid when they're rebuilding after bankruptcy?
I think it's more a case of trying to pay attention to some deal sounds too good to be true. My feeling is that you find yourself a credit card and you make that your primary card and pay it. So now you're developing a history of making your credit card payments. You know, I don't, a lot of debtors, after they're going to get their discharge, they never want to have a credit card again, and never want to do this. But you sort of need it in America, though. I tell you, when I look at some of the, we see people's bank statements in preparation for filing a bankruptcy. And when you look at their debit card transactions, you can see how, minute by minute, how they live. Oh, you
Yeah.
stopped at the liquor store. Oh, and then you went to eat. But, there's really, I don't think there's anything that you can try to do except try to stay away from whatever created your problem in the first place. And, if it's external, like losing a job, or, yesterday I had three cases, two of them were workman comp cases. They can't work again. What are you supposed to do about it? There's not much you can do.
Yeah, it
You know,
is
like,
what it is. Or
like,
somebody gets
my woman
horribly
who,
sick and doesn't have good medical coverage. It
yeah,
happens
well,
all the time.
and the thing is, when you, like I said, like my example of the woman who was a very high earner, and I don't know how much debt she has, but salary was cut by like 80%, and she went from being an employee to being a contract worker.
Yeah.
So your job can be gone at any minute. So how could you keep paying? There's just so much you can do, and the difficulty. People, in my opinion, you really only need to pay what's essential: mortgage, rent, food, car. Bank of America can suffer.
There you go. So, what role does budgeting and financial planning play in the journey of rebuilding?
Well, as somebody who doesn't believe in any of that stuff, I happen to be a firm. If it's good enough for jazz, it's good enough for me. My wife once insisted we go see a financial planner. And when he mentioned to me, Barry, this was like 30 years ago, if you die, you don't have enough insurance for Jane. I said, well, she'll go to work. And then he asked me, he wanted bankruptcy information. And I'm sitting here and I look at my wife and I said, I'm going to him as a financial consultant and he's asking me about filing a bankruptcy. Last time I went near one.
Yeah, I could see where that would turn you off on the experience.
Well, and then I once was dealing with a CPA who, when he prepared the returns, couldn't put his name on it because it was a guaranteed audit by the IRS.
Oh my heavens. Okay. Well, that's another one to take a pass on. Things you should ask about your CPA.
Well, listen, it's like when you have open heart surgery, whether you got an A in open heart surgery or a D. I mean, you have no idea.
True. So, what is kind of the typical timeline for rebuilding credit after a bankruptcy?
You'd be surprised that it can happen fairly quickly. I have heard from clients that within months of getting a discharge, they'll get a solicitation for a new credit card. Again, if you have ongoing mortgage payments and car payments, that stands in good stead for you. And then there's always the collateralized credit card. There's nothing to stop, in my opinion, there's nothing to stop somebody. I filed bankruptcy today and I managed to, I put $400 in an account and taking out a collateralized credit card.
Beautiful.
It's a matter of how much you can afford to do.
Very good. Well, thank you for coming and sharing your wisdom with us today, Barry.
Pearls, nothing but pearls.
Thanks for tuning in to Bankruptcy Through the Looking Glass with Barry Levine. To connect with Barry, head to levineslaw.com and be sure to like, subscribe, and review.
Thank you for joining us on this enlightening journey through bankruptcy. Don't forget to like and subscribe for more content like this.